Wherever you are in the world. Welcome back to another coffee hour where we're going to be talking about, finance, stocks, investing, a couple other different topics. But today's episode, we're going to be talking mostly about Bitcoin and a little bit about strategy. Because strategy has been in the news recently, and we definitely want to cover what they're talking about because I think it's going to be interesting. So I think this stream is going to be really short. I don't think it's going to be that long today. I'm running on just a few hours of sleep. I've been up all night, tossing and moving and checking the markets. So, we're going to get through it. All right. We're going to get through it together. So first things first, we're going to go through a quick portfolio overview. Then we'll run into the news segment, and then we'll hit the market segment, and then at the very end, we'll do a portfolio deep dive and then just kind of check on things. Today was obviously a pretty red day, nothing exciting in the markets. Tomorrow is going to be the big one, which I'll cover here in a moment. And then again, we have to keep an eye on what's happening between now and April 2nd. All right, because April 2nd is going to be when the tariff bomb drops, if no new good news comes from between now and April 2nd. All right. And then, of course, like I mentioned, we have the Federal Reserve meeting coming up tomorrow. All right, guys, let's get into it. Okay, so this is the portfolio again. You guys have been seeing this kind of fluctuate. What's going on here? Oh, that's why. Okay, so you guys have been seeing this kind of fluctuate up and down. One day it's 50,000, another day it's 43,000, and then the next day it's back up to 50,000, right? So annual net income is expected to be 53,000. Of course, you can't take this as fact. This will fluctuate over time as dividend payouts change. Okay, March income, I'm expected to make $4,500. Dividend yield for the entire portfolio is sitting at about 11.5%. All right, looks like, let's see, today we're sitting at a portfolio value of $534,000 out of a possible $562,000. So we're still down about, $28,000, which again, is what it is. The whole market's been going down. It's been pretty volatile over these last couple of weeks, and it's going to continue being volatile, I predict, easily into the future. All right, so first up on the docket, I wanted to kind of point this out, or at least explain to you guys that going forward, I really want to start focusing on a couple of different companies. And I met with an investor yesterday who also watches this show from time to time. But he mentioned that you should focus on a few stocks, right? That's basically where the money is made, right? You should focus on a few different stocks, not try to be super diversified, looking at every little thing, right? So I thought that was a pretty good comment. That was a pretty good suggestion. So I wanted to narrow it down, not to the Magnificent Seven, because we already know about the Magnificent Seven, right? We already know everything there is to know about Amazon, Meta, Google, Apple, Netflix, Tesla and nvda, right? What I want to do is kind of focus on the future and focus on the next generation of whatever that Magnificent Seven is going to be, or whatever they're going to call it, right? They always have some stodgy name to it. Like it used to be known as FANG stocks. Then, before then was it the Nifty 50? And then in the 2000s, it was, the dot-coms. And then, then it turned into the Magnificent Seven, right? And these were companies that were basically driving the returns of the index. So right now, what I want to do is focus on this whole AI thesis and how it's going to play out over these next 4 years, and definitely over this next decade. So for these, I chose, and this list is subject to change. This is just a starting list. And what I'm going to do is basically dig into each of these different companies and kind of present my findings. And, of course, definitely open positions with them if I see a good opportunity, or if I'm excited enough to open a position with them. I don't think I will hold these as buy and hold long-term positions. Nothing like, like holding, Amazon long-term. I don't think so. What I probably will do, in all honesty, is looking at some type of cover call action against them, whether it's investing into a cover call ETF, or maybe doing a 2x levered position, like a bull, bull ETF or something. Because there are 2x levered positions for most of these, right? For AMD, for Palantir, for NVIDIA, for SMCI. So again, I'm looking at kind of my options. I want to do a little more research into this. I don't plan to do any type of like back testing or anything fancy like that, but instead I want to be able to generate money, generate income from these, right? So this is why I don't plan to hold these long term. Instead, what I want to do is make money off of them. Yes, I could do my own cover calls, but I mean, if you're looking at these prices right now, $100, right? 119, 173, 731, $37, 115, right? I need at least 100 shares of these in order to do any type of cover calls. So I would have to come out with some serious cash, which, sort of might be in the works, because I am really debating getting out of my roundhill Ethereum cover call position. And then I could use that as dry gunpowder to kind of do the cover calls against this. So that is one idea I'm floating. Another idea I'm floating is just buying the cover call ETFs themselves, because again, you don't need 100 shares. And I'm still learning how to do cover calls myself. So if I learn how to do cover calls myself and actually understand, the process and the mechanisms and, how to, write your calls out, then I'll probably go that route. But again, it all depends on a lot of things. I got a lot of learning ahead of me. And I'm trying to focus that, with, actual life, like real life, like going to the gym, staying healthy, working on other things, other projects and stuff like that. So again, all of this is all up in the air, but I definitely wanted to at least open this channel up to covering specific stocks or specific companies. And again, I've really been, ever since I started this, well, I won't say ever since I started this channel, but ever since I started doing a lot of these lives, I really do like this whole AI thing, right? And it started with Palantir. It started with understanding why Palantir is so good, why Palantir has such good prospects into the future. So I really am excited about this. Again, I'm just going to experiment. I will release my findings. I will release my plays whenever I do make them, because I want to be as transparent on this channel. You guys will see my failures. You guys will see my successes. You guys will see and understand kind of my thought process. But for at least an informational perspective, I do want to at least show you guys kind of this, right? This list of companies that I want to follow. Again, I don't want to be following 100 different companies. Like I was looking at Ondas, which is one of Palantir's partners, and I was actually considering like actually investing into these guys. But the more I dug into them, it's just, there's nothing, in my opinion, there's nothing sexy there. There's nothing that screams at me that says, hey, this is a great opportunity. If you look at their investor presentations, they have their Iron Drone capability, right? So Ondas Holdings is split between Ondas Networks and Ondas Autonomous Systems. The Ondas Autonomous Systems is the defense specific, market, right? They're targeting, security, they're targeting defense, they're targeting, offensive type of capabilities, I'm sure well into the future. But their drone technology it's like Android, like an Android phone having the capability to run Microsoft Word. Like that's all the partnership is. Really, it benefits Palantir more than anything. Like Ondas, basically, they took their drone tech and they made it compatible with Palantir. Like that's cool. But what else does it do? Well, their Iron Drone system, what it does is it's a box of drones, and I wish I had some pictures for you guys. But basically, it's a box of drones, and these drones will come out, right, and they'll go hunt down other drones and shoot a net at it, right? That's cool. Definitely for stadiums whenever there's these large events, or whenever, some type of corporation wants some very basic defense, maybe like a nuclear energy site or some type of energy infrastructure. I could see that where people are just flying drones over. Like I was in Kuwait and they flew a drone over their oil refinery at one point. It scrambled the whole freaking military, scrambled the whole police force, right? Trying to find out where this drone came from. And it turned out it was from a drone enthusiast on the American side, which, that resulted in that person getting fired and kicked out of the country. But anyways, I digress. So I'm looking at this drone tech and I'm like, is there really anything there? If you have a column of vehicles or a base or a defense line of troops, can they Are they really going to have this big box of drones just sitting there, right, and protecting them? I don't know. It's possible, but I don't see it. I just personally don't see it. They are increasing their revenue. They do have a backlog of stuff that they have to get through. They had a couple orders with some defense contracts. So it is there. It is there. Like, something is there. I just don't see it. So I'm not going to really invest any money into Ondas or anything into Ondas Holdings. You know, it's a very speculative play. It's 74 cents. I mean, if you want to throw $1,000 at it and just let it ride, you know, you don't care about that $1,000. You can give it to me, and you know, I'll take care of it. Or you can just, you know, put it into Ondas. You don't care if Ondas goes to zero. They almost got delisted not too long ago because they had to get their holdings or their paperwork all together. They eventually got it all together to maintain their NASDAQ listing. So again, just things to think about. And I looked at their management team. Again, nothing in their management team screams like super sexy at me. Like there's nothing in there in their management team. It's just a bunch of people, business as usual. There was a There was a hedge fund of some sort or some type of smaller institutions investment firm that did invest about $15 million into their company. But again, I mean, nothing screaming at me like, hey, this is a great opportunity. So again, the partnership with Palantir, if anything, I think they're using it as a marketing gimmick on Ondas Holdings. I really think they're just using it as a marketing gimmick. So yeah, after really looking into it, it's just nothing that really excited me. I'm not saying this company is bad by any measure. I'm just saying that for me personally, I don't want to invest in it. And right now I'm in the mode of investing for income. So I need to, you know, find some type of way to generate income. That's my whole reason why I got into this cover call space, right? So yeah, anyways, that's what it's going to be, guys. Appreciate, you know, I'm looking at some of the comments, really appreciate it. I'm reading the comments here. So let's see. Strategies over spreadsheet, rate your own cover call options. Yep. Keep a good amount of your core holdings and use margin to buy the shares. It's easy, bro. You'll get it. Appreciate that, guys. Come on, bro. We're on the same team. Yeah, guys, shoot me a DM. Not, you know, just shoot me a DM if you don't mind. I'm not sure what's going on there. But anyways, yeah, so this is pretty much, you know, kind of my thesis behind everything. So anyways, for Bitcoin, there was a article that came out from CoinDesk, basically saying that the end of the bull market cycle for crypto is here. CryptoQuant's Ki Young Ju says the Bitcoin bull market is over, according to crypto research firm CryptoQuant's founder Ki Young Ju. Ju posted on X that he is expecting a 6 to 12 month of bearish or sideways price action as the Bitcoin bull run loses steam, citing declined liquidity in the market. New liquidity is needed. The on-chain realized cap has stalled, signaling no fresh capital inflows. For example, BlackRock's IBIT saw 3 straight weeks of outflows. He said in a Telegram note to CoinDesk, even with record volume near 100K, Bitcoin's price barely moved. Without new liquidity to offset heavy selling, this is a bearish signal. All right, so again, I'm still trying to understand Bitcoin and crypto in general. Again, I don't fully know the whole season thing. I don't know when the highs, the lows. I don't get all of that stuff. I see, you know, kind of in the news that there is a lot of purchasing happening. I see in the news that, you know, BlackRock made a purchase, Fidelity made a purchase, a couple other institutions made a purchase, and you even have our most popular or infamous strategy, you know, coming out with a whole new set of ways to basically raise money for Bitcoin. So, which we'll be covering here in a moment. But yeah, all this stuff for, you know, crypto and crypto winter, it seems like the signs are starting to point that yes, there is going to be a downward trend of some sort. And again, I'm speaking with other investors who are a little more versed in the space, some are saying that they're going to see definitely a drop to at least 70K before a bounce. I don't know how true that is. It's not based on any balance sheet. It's not based on anything. Again, whenever you're whenever you're investing into crypto, it's always market sentiment. It's always investor hype. It's always whatever's in the news, so for Bitcoin, I see no different in that. A recent report from Crypto Quant made the case for the possibility of Bitcoin's return to $63,000, citing bearish signals from key valuation metrics like the MVRV ratio z-score, which compares Bitcoin's market value, MV, to its realized value to identify overbought or oversold conditions. Again, this is a word salad to me. I don't fully understand, this methodology, but it is exciting. It is exciting to see because I have a position in SBIT, which is a 2x levered position against Bitcoin. It's basically an ETF that's shorting Bitcoin. So I'm hoping and holding for the long term that that Bitcoin is going to go down in price. So I just wanted to cover this because, again, there is still a lot of hype around Bitcoin. Of course, there is. And a lot of people are still saying, hey, like buy Bitcoin. Now's a dip. Buy Bitcoin, right? And I think it could be a lot of people walking into a trap. I mean, if they are going to hold Bitcoin for the long term, a buy and hold type of deal, then it's really not going to affect them as much. Because Bitcoin next year or the year after could be 150, could be 200, right? I don't know. But, holding over the long term definitely is not always, it's definitely not a bad idea. Of course, that's not financial advice, but in the short term, for all the volatility that we're experiencing and this whole idea of the crypto winter, being here and how long crypto winters typically last, again, I don't know what the exact number is. But if we're in a crypto winter and it's going bearish and the price of Bitcoin is dropping, if you want to make some money and make some fast money, you could probably look at shorting Bitcoin, at least in the short term, based on the volatility and based on all the news and market sentiment. So that's what I'm doing. That's the strategy I'm following. Of course, don't follow me. All right. This is not financial advice. All right. So moving on. BYD, which I've covered on this channel several times. BYD is a company that creates electric vehicles. All right, they create electric vehicles similar to Tesla, but they're based out of China. And BYD has been on a tear. I've covered BYD a little bit over a couple streams, but really it's whenever I talk about Tesla. Tesla is just going through the ringer right now. They're getting their butts handed to them, right? Their share price has declined almost 50%, if not probably a little bit more now. And BYD is taking a huge market share in China, right? And it's not surprising that you're starting to see more BYDs probably in other markets as well. Meanwhile, Tesla, whether you love them or hate them, the price of their stock is going down, not only because of the politicking that Elon Musk is doing, but also because they're having trouble getting car sales, right? Getting car sales and producing more cars. BYD is producing more cars faster than Tesla and at a cheaper price, right? I've covered this before that model for model, year for year, BYD is cheaper. They have more standard features than a Tesla, and they're constantly innovating, and they're constantly, just like Tesla, they're constantly innovating, and this vehicle is more available to basically the retail consumer, right? Just anybody. You don't have to be someone who's super rich to afford these cars. But now BYD came out with a whole new charging system that caught a lot of people off by surprise. BYD shares hit record high after rolling out a new ultra-fast EV. All right, Hong Kong listed shares of Chinese electric vehicles giant BYD hit a record high on Tuesday after the company unveiled a new fast charging technology and announced an employee share incentive plan. Shares rose as much as 6% to a record 408 Hong Kong dollars, equivalent to $52. Early Tuesday, before pairing gains to a 3.2%. BYD on Monday unveiled a new Super E platform technology, which it says will be capable of peak charging speeds at 1,000 kilowatts. Shenzhen listed BYD shares rose as much as 2.6% to 390 yuan, whatever, their highest level ever. Shares of Tesla, the rival basically, have been on a tear since the start of the year, with the U.S. listed stock up over 50% on a year-to-date basis. So BYD is absolutely killing it right now. I think, again, BYD is going to continue, on its tear, but I don't know about Tesla. I don't cover Tesla really all that much, aside from the politicking that is happening, and obviously, Tesla, you have a lot of cars getting vandalized. You have some of their dealerships getting attacked, and you have even a U.S. president right now saying that if there's any vandalism or attacks on Tesla cars or Tesla dealerships or whatever, it's going to be treated as almost a domestic terrorism, right? So that is kind of wild coming from a sitting U.S. president to say that. Again, what is causing Tesla's share price to decline? That's the real answer. Is it a combination of what Elon is doing, plus, the fact that they're having trouble pumping out new cars? Or what is it? Is it a combination of both? Is it just one or the other, right? Because if Elon was just politicking, but Tesla was also meeting the quotas and pumping out cars and able to meet all the demand, then it would just be a really good company with a bad press release, right? And they're still doing really well when you really look under the hood. I mean, Tesla is still doing very well. They have their whole robotics division coming out with their whatever that robot is, so they are still doing well. They're still innovating. So, hey, Dan, welcome back. He bought more. Yep, of course you bought more. I know how you roll. Yeah, again, it's the change to the Model Y and of course, the politicking with Doge. But, this Chinese competitor, again, is coming out. It's giving Tesla a run for its money. Does Tesla have a future in China? I think that's, a good question. Does Tesla have a future in Europe is another good question. So just something, again, if you're a Tesla investor, I want to hear from you. I would love to hear from you. What do you think? Maybe I'll add Tesla to my little portfolio or my little watch list here. Maybe I'll do that because I really do think that Tesla, what's crazy? Tesla was able to come out with robots faster and commercially faster than Boston Dynamics, right? Or Boston Robotics or whatever that company is called, or other companies, right? That spent millions and millions and millions of dollars on robotics. And here comes Tesla, a much younger company doing it much faster. So I don't know. I like that idea. Maybe I'll run with it. I don't know. Maybe I'll run with that. Okay. So, micro tragedies. What's up, Rook? All right. So let's take a look at the Fed. All right. We know that tomorrow is going to be the Federal Reserve coming out to talk, which I will cover in tomorrow's stream. All right. But yes, the Fed will update its rate projections on Wednesday. And again, this is more of a pundit piece, so take it with a grain of salt. But federal officials at this week's meetings are expected to hold interest rates steady, which we kind of already knew. We kind of already figured that out. But adjust their views on the economy and possibly the future path of interest rates. This is going to be the key right here. When Jerome Powell speaks, and we're going to cover this minute for minute on this channel when he does speak, and I'm just going to give you guys my thoughts, right? Because it's not about the interest rate right now. It's what is going on in their heads that is more important. Their views on the economy, their views on the impacts of tariffs, and then they can give us an idea of how many rate cuts we can probably expect, or are they gonna just take a wait and see approach, like they have been? Basically, we're trying to discern, is this going to be a hawkish Fed or is this going to be a dovish Fed, right? So this is what we want to answer for ourselves. This is what we want to know, so we can kind of surmise from all this information what the future looks like for the stock market, right? That's what we want to know. So I'm going to be covering this again, like I said, minute for minute in tomorrow's stream. But real quick, Federal Reserve officials this week, at this week's meeting, are expected to hold interest rates steady, but adjust their views on the economy and possibly the future path for interest rates. If market pricing is correct, there's virtually no chance central bank policymakers budge from the current level of their key interest rate targeted in the range of 4.25% to 4.5%. Chair Jerome Powell and his colleagues in recent weeks have advocated a patient approach in which they don't need to be in a hurry to do anything. Now, don't be surprised if you start hearing or seeing on YouTube or a bunch of news, you have the Trump put, then you have the Secretary of Treasury put, then you have the Fed put, right? Don't be surprised if you start seeing all this stupidity out there in the media land, okay? watch, you know, if you can, definitely catch it. Definitely catch the actual stream for yourself and formulate your own conclusions. All right. Because I like to watch these things. I like to watch what Powell says, you know, word for word, minute by minute. And then I like the questions that the reporters ask, because they do ask some very good questions after the briefing. And, you know, again, the way they answer, the way the Fed answers is key. I don't think, again, we're going to see any type of rate cut, you know, at least until June. And then after June, we could possibly see maybe 3, right? There's projections, or there's rumors out there or whatever that there could be 3 rate cuts this year after June. So that's what I'm kind of betting my hat on, or I'm you know, placing my bet on, but that is where I'm going to wait to see. So this is why I think like we really are not going to see any reprieve in the stock market until about April timeframe, when the tariffs drop, or if we hear better news, right? We won't know until then. And then as you see in the macro environment, the policymaker, you know, arena, President Trump and his cabinet, Secretary of Treasury, et cetera, Secretary of Commerce, they basically tiered all the countries that have tariffs on the United States, right? I don't have the article. I didn't find it in time, but they basically have all the countries listed by tier, right? And this is just an idea that they floated. There's nothing concrete about this, but basically they have low, medium, and high. And they're going to adjust their tariff policy accordingly to these countries that, you know, have either, you know, high tariffs on the United States, medium tariffs, or low tariffs, or whatever the case may be, right? And the United States will reciprocate in kind. So again, maybe the tariff wars are just going to heat up. We'll see. So anyways, that is that. Man, I have a lot of chat today. What's going on? Let's see what's going on real quick. Okay, just more Tesla stuff. Gotcha. All right, cool. All right, so this was in the news. Strategy, our boy Michael Saylor is back in the news. MicroStrategy, whoever you want to call them, love them or hate them, they're back in the news. And they announced a new offering, right? A new stock called STRF, Perpetual Preferred Stock Offering. Okay. This is basically a word salad. I'm not going to go through all of this. Again, all the links to all these articles will be down below in the show notes after the conclusion of this stream. All right. The Perpetual Strife Preferred Stock will accumulate cumulative dividends at a fixed rate of 10% per annum on the stated amount. Regular dividends on the Perpetual Strife Preferred Stock will be payable when, as, and if declared by the strategy's board of directors of funds legally available for their payment, yada, 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 right? So this might sound like a word salad. So what we're going to do is actually look at an article that kind of explains it a little better. I try to find a YouTube video to kind of show you guys that would explain it, but this is so new. I think there's only one YouTube video on the topic, and it wasn't really all that good, to be honest. All right, so Michael Saylor's strategy, funding more Bitcoin purchases with new preferred stock. All right. The world's largest corporate holder of Bitcoin is looking to raise around 500 million in an offering of perpetual preferred strife stock. It's definitely going to be called preferred strife because there will be strife. Just real quick, in case you guys didn't know, if we look at strategy, right, they have MSTR, which is common stock. Then they have Strike, which is their, you know, additional it's not common A stock, it's some kind of debt, or maybe it is common stock, I forget, but yeah, they have Strike at an 8% dividend yield, right? And basically these can convert to MSTR shares. Then they have the debt, the convertible notes, right? And we already covered that you guys, me included, we retail investors cannot invest into this directly through strategy. Only institutions could. However, income BMax from Rex Shares. BMax allows you to invest into these actual convertible notes. All right. You could see that the coupons are super low. Like these are your interest rates. Essentially. These are a joke. You're not going to be making any kind of, you know, passive income off of these. These are all plays on basically Bitcoin going up in value and it converting to that price, right? That's what you're betting on. You know, because as Bitcoin rises, the share price of MSTR will rise. And then what these debt instruments, these convertible notes turn into common shares of MSTR, right? If MSTR is under the price of whatever, you know, they bought this at, let's say they bought, you know, yeah, 92,000 right here, right? Let's just take this as an example. They bought, convertible note, $92,000, right? Let's say MSTR's price is under that $92,000 Bitcoin price. Then you'll just get a return of your principal. You just get your money back, right? But if MSTR's price is much higher than this $92,000, Bitcoin, let's say, is at 115,000, then this will convert into MSTR shares, and you'll be at a much more elevated price. So I hope I didn't really scare the hell out of you guys or confuse you guys. Again, I covered this in my stream about bmax and strategy, so you guys can definitely check out that stream if you haven't already done so. Again, it's nothing I'm going to be investing into. This guy is literally, he needs to be stopped. Like he's like a super villain at this point. He just needs to be stopped. He keeps finding new ways to just get people's money so that he could put it into Bitcoin. He is the ultimate freaking Bitcoin like villain at this point. The world's largest, the world's largest corporate holder of Bitcoin is looking to raise around $500 million in an offering of perpetual preferred Strife stock. All right, and this is him looking stressed out. I guess this is from some type of conference. I don't know if it was the crypto summit. I don't think so. Anyways, Strategy is set to issue 5 million shares of Strife Series A perpetual preferred stock. This new series will have a fixed 10% annual cash dividend versus the 8% initial offered by Strategy's original preferred issuance, basically talking about Strike. If the dividend is unpaid, the interest will compound in an additional 1% per year. So basically, preferred shares, the way they work, we're not going to get too much into this. I just want to touch on it. Basically, preferred shares, they sit higher on the capital stack, meaning that if MSTR was to go bankrupt, preferred shareholders would get their money first before a common shareholder. If you own MSTR, you're not going to get paid diddly squat, right? The preferred share owners would get paid first, right? The debt owners would get paid first. The people invested in the debt would get paid before you got paid if you hold MSTR. All right. How that would affect, anyone who's investing in, msty, for example, I have no clue, to be honest. I mean, if MSTR was to go bankrupt, then I would assume msty holders would have a fund liquidation event of some sort. But I guess the question is, would Strategy go bankrupt? I have no idea. I definitely think they can have a point where they would have to sell Bitcoin, their Bitcoin holdings, in order to fund whatever. They had that whole tax issue at the beginning of the year. I don't know what happened to it. I haven't checked into it, but it was basically Strategy and Coinbase writing a letter to the Secretary of Treasury asking for an exemption. Whether that exemption got passed or not, which I assume it would, because Trump has favoritism towards crypto, and plus Saylor was at that crypto summit, so I would assume it did get passed. But yeah, there was that point where, in order to make up that tax burden, they would have had to sell Bitcoin, and if they had to sell the Bitcoin, that would cause kind of a ripple effect in their company. But anyways, moving on. Strategy MSTR Tuesday morning unveiled its latest twist at raising funds from capital markets to fund additional Bitcoin purchases, but there are indications the Wall Street spigot is slowing. Excuse me. The company's perpetual Strife preferred stock offers a 10% annual cash dividend paid quarterly, according to an SEC filing. If dividends are unpaid, they compound at an additional 1% per year. All right, so think about that for a second too. They're going to give you a 10%, preferred share when annualized, right? So over 4 quarters, they're supposed to pay you out some type of money. But if they don't pay you out money, right? If they miss a quarter where they're like, hey, there's going to be no distributions, what they'll do is they'll just tack on 1% and then owe you also what they're supposed to have paid you at the end, or make up that payment at another time. You see this a lot in real estate, especially real estate syndications. They have something called preferred shares, and preferred shares basically, again, you sit higher on the capital stack, right? But you're always lower compared to debt, right? Compared to the banks that own the mortgage. But anyways, they would do that up to a maximum of 18%. So if they kept missing payments for you, which I think is probably likely, or else they wouldn't have put this in there, then they will make it all up to you with 1% additional up to a maximum of 18%, right? The first dividend payment is scheduled for June 30th. Strategy's initial preferred series, Strike, initially offered only an 8% interest rate, and Strategy series of convertible debt offerings came with negligible or even 0% interest rates, right? So which we already just showed you guys. I mean, these are a joke, right? So people who are getting into BMax, you know, they might be pleasantly surprised that they're not going to make any type of money. You know, the interest rate on this is atrocious. Again, these are long-term appreciation plays for the institutions investing in them. And if you're going to invest in BMax, then that would be what that is. All right. You're investing on a appreciation play. All right. So really quick, just wanted to break this down. I used ChatGPT because I wasn't going to make you guys a fancy chart because I'm lazy. Just to compare the two, Strike and Strife. So basically, this is, again, preferred stock. This is also preferred stock. This is 8%. This is 10% dividend yields. Dividend payouts subject to board approval, typically every quarter. And this is cumulative dividends payable quarterly when declared. And of course, they put that in the article, as you guys saw, that, you know, if they miss payments, they will make it up. Liquidation preference ranks above common stock, below debt, and we already covered that. That's for Strike. And then for Strife, $100 per share ranks above common stock, below debt. Of course, if you hold mstr, again, you know, if there's a large liquidation event of some sort or a bankruptcy of some sort, the Strike holders, the Strife holders, and the debt come way before common shares. All right, conversion rights. So Strike should, you know, the whole idea behind Strike is that they can be converted into mstr shares. So you see that here. For Strife, you're, I guess, not allowed to, or this is not specified. Redemptions, perpetual, no maturity date. You know, so again, perpetual means you can sell, you can buy and sell at any time. Like you don't have to wait for it. With this, company may redeem all shares under certain conditions. They're raising $5 million worth of money, or was it 5 million? I think it was 5 million, right? Let me just double check. I don't want to sound dumb here. Oh, 500 million. Oh my God. Okay. So 500 million using 5 million shares of preferred stock. Offering size for Strike is 21 billion at the money. And then use of proceeds, again, both the same. Basically, general corporate purposes, including Bitcoin acquisition. All right. This is what always worries me whenever I see this, general corporate purposes, because this could be funding, you know, plane trips. This could be funding, you know, general accounting. This could be, or general, you know, corporate garbage, right? Whatever they need, right? If they need money to pay people, they can use it. If they need money for buying trash cans, they can use it, right? And Bitcoin acquisition, right? So every time I see things like this, it always makes me raise an eyebrow. I saw this especially with, and I'm not knocking him, but I'm just saying my thought. You know, Meet Kevin has a couple different companies out there. There's like House Hack, there's AI Hack, there's all these other companies, right? And now, and he's been on a tear raising a bunch of money from his audience, right? He's been raising a lot of money. And in his earlier prospectuses, he never included this line, right? He never included general corporate purposes, at least from what I've heard or what I've read, right? And then recently he started including it, right? So, you know, he has a plane, he has a private plane, he has all this, you know, he lives a lavish lifestyle. A lot of people were thinking that he was using investor proceeds to buy this stuff, right? But he's on record for saying, no, that's not the case. And then he even added a bunch of verbiage about, you know, like whatever he says on YouTube is not, you know, it cannot be used against him in the court of law, essentially. So anyways, not here, not there, but, you know, I just wanted to include that little bit. So this line always kills me every time I see it. So just a quick update on the crypto whale. They had about a $450 million short, and they cashed out. I think they cashed out with 9 million in profit. So congrats to whoever that person was. I covered this on yesterday's stream. Now he's taking a position in Melania token, and he's taking a long position. So hope you guys can see that. Let me see if I can zoom in here so you don't have to put your eyes to the phone. But yeah, basically a long position in Melania token, which I find is kind of interesting. I don't know. But yeah, this person got out of the Bitcoin short. So S&P 500, excuse me. So S&P 500 obviously ended in the red today. Not good. NASDAQ 100, again, ended in the red. Bitcoin looks like it's fluctuating, You know, it dropped down to $81,000, almost $81,000 two times yesterday. And I was watching this because, again, I'm invested into SBIT, which is a 2x leveraged short position against Bitcoin. But now it's starting to rise up, which, of course, is like son of a gun, you know, whatever. That stuff happens all the time. So I'm just waiting. I really think we're going to go under 80,000. I don't know at what point I'll cash out. You know, I could make a quick $500, or I could make a easy $1,000, or if I hold it until it goes down to like 75,000 a coin, or even $70,000 a coin, I could be making a easy $3,000 to, you know, $4,000, right, on this bet. So, or I could lose a bunch of money if crypto just all of a sudden moons back to, you know, 100K a coin. So we'll see. We will see how this turns out. And of course, gold, the best performing, you know, asset year to date, has been up again. This is all investor sentiment, right? This is all investor sentiment. They're worried about the FUD, the uncertainty, the doubt, the fear, the whole tariffs, you know, how's the economy going to react, all that stuff. And gold is just outperforming like a beast. So this is a great way to hedge, but of course this comes with its own unique tax consequences if you decide to sell. So again, I'm not a CPA of any sort or a tax professional. Definitely those are people you should talk to. So 10-year treasury, this thing has been hovering. It's been killing me. I really, really would like to see this go lower. But again, I think we'll see what happens after the Fed rate decision tomorrow. It's again, for this right here, it's not based on the federal funds rate, which is, you know, what the Federal Reserve sets. This is almost funded basically on investor sentiment, right? At least in my opinion, it is. I don't know if it is for fact, but basically investor sentiment is going to drive this thing up or down. And if the Fed has a very good tone tomorrow and says a lot of good things, I predict we'll see this 10-year treasury go down. And then finally wrapping it up is VNQ, which is the Vanguard Real Estate Index ETF, which is, you know, a barometer for the REIT market. We see that they are down about 52 basis points, right? We did have a good, you know, recovery on Monday and Friday, you know, but today obviously not so good. So is what it is. All right, guys, I'm just going to check the comments, and then I'm going to hop into my Robinhood platform and M1 Finance, and then we'll close out the stream. So just real fast. Let's see. Tesla, yep, more Tesla talk. Tesla. Dilution is a solution for mstr. Well, that's from It's a Wealthy Life. Dilution is the solution for mstr. That's a good phrase right there. Rook says the Swiss National Bank is expected to cut its policy rate to 25 basis points in March 2025. You know, I did see an article out there. There is a ton of other countries that have been lowering their interest rates. Crazy enough, and not to get into the whole war thing, but Russia's interest rate right now, I think, is like in the 20s, like 20%. And at one point they were toying with the idea of liquidating people's bank accounts in order to fund their war. Again, we're not here about, you know, Ukraine or Russia, but again, it's just that idea, that whole concept, you know, is wild to me. And, you know, an interest rate being that high is absolutely crazy. So yeah, just the United States also had a high interest rate at one point in its history. I think it was hovering around like 18%, maybe even as high as 20%. But yeah, the United States had an interest rate that was high as well at one point. Let's see. It's a Wealthy Life says, I think this will be the next major bubble. If you're talking about Bitcoin, you know, I agree. I definitely agree in my opinion. Bitcoin or crypto in general. But you know, it's like, maybe it's not a bubble. Maybe it's just like multiple bubbles that always get popped, you know, or now they just gave it a really fancy name. You know, they gave it the whole crypto winter or crypto season or altcoin season or whatever. But maybe it is just bubbles constantly getting popped. I don't know. Let's see. Yeah, absolutely. Michael Saylor is addicted. He's definitely the modern day Bitcoin supervillain. He's just trying to collect all the Bitcoin and hold it for himself. That is crazy. That is just crazy. Waiting for the next margin call of the century. Feels like the biggest pump and dump, says It's a Wealthy Life. Yeah, that's going to be interesting, you know. And the United States, the the country was downgraded by S&P for their debt obligations. They actually went from a credit rating of, I'll have to find the article. Maybe I'll include it in tomorrow's stream, but there was an article like a year ago or maybe a year and a half ago where the S&P actually downgraded the United States. Like they downgraded them based on all the overspending that we were doing, to fund everything. So this is why I understand, the current administration's plan to basically kill the deficit, kill all the government spending and bring our freaking spending levels down a lot. Because if you look into the whole S&P downgrading the United States, it's an interesting read, right? It's an interesting read to have a modern day superpower like the United States get a credit downgrade, which is wild to me. All right, anyways, let's open the portfolio, guys, and we'll end the stream. Okay, so here is the Robinhood. Obviously, I don't even know what this spike was. Probably nothing. But yeah, nothing new here. All right, nothing new. I'm still holding all my same positions. Yesterday was a bloodbath. PLTW, cover call ETF for Ethereum, YETH, XDT, XPay, and then SBIT. SBIT is the one I'm holding, and I'm hoping that, as Bitcoin continues going down, we'll see its price rise. You can go with something like, if you hate mstr with a passion and you want to make some money off them, you can consider something like, what was it, SMST, if I'm not mistaken, SMST. Yes, this is the one. You can consider this if you're not a fan of Michael Saylor and you want to, stick it to the man a little bit and make some money. You could invest into SMST, right? I chose to just go with a straight Bitcoin short ETF versus that one. I don't know. To me, they're almost the same, but maybe they're not. So other than that, yeah, that was all there is for this. I do have some dividend income coming in from PLTW. They did increase their dividend payout to about 45 cents. It was, I think, 17 cents the last time, and this is a weekly payer. So that was interesting to see. Again, I'm just holding this until Palantir can rebound, and then, I will sell out, hopefully at a very decent profit. And then while I'm waiting, I'll just make some money on the side from the dividend income. All right, let's take a look at the core portfolio, which is hosted on M1 Finance. Sorry, I gotta log in here. Okay, cool. So there we are. Hope you guys can see that. But yeah, nothing new or exciting here. It's business as usual. Looks like REITs rebounded again as for a while, as REITs were, going up in value or zigging, the rest of the market was zagging, and that's because they're two completely different asset classes. But again, I'm still in the green with REITs, which I'm very happy with because it's keeping this portfolio kind of almost neutral. Technology, obviously, I'm down quite a bit. I invested $170,000, so I'm down, almost $22,000. So not quite as exciting, not as, something I was expecting. But again, I don't think anyone really expects when the market goes down, right? You can only position yourself defensively whenever we're at these super elevated all-time highs. And again, I know people will use that whole PE ratio thing, like, oh, look at the PE ratio, look at the PE ratio. Like that is a great indicator. It is a metric, but it is not the only metric, okay? Like we've been in several markets where the PE ratio just always was at its highest. And you always have these pundits come out to say, oh, the stock market's going to crash. There's going to be this massive crash, right? A broken clock is right, twice a day. So eventually, yeah, they're right. And then they write a book about it and then, get a bunch of sponsorships and YouTube money, but whatever. BDCs, nothing exciting there. We were down 54% at one point, down to 54%, but now we're back up. BDCs, business development companies, they basically lend money out to higher risk, businesses that need funding or that need money to basically, fund their projects or, whatever they're trying to do. And then, of course, just a crypto ETF. Nothing exciting there, just a Bitcoin ETF. Again, I haven't put any new money into this. I'm going to wait to see how Bitcoin reacts before I do anything. But yeah, that will do it for this stream, guys. Let me just check the comments one last time and before I end it. So It's a Wealthy Life says, I need to make some trades this year, only up 350 on the year in real life. 350 what? 1,000 or $350? Man, I might have to hold a little bit. You're gonna have to let me hold a little bit. I do have to come out with a video for the whole 7-Eleven thing. I know I owe you guys that, so I will at some point. I just had I think it was Saturday or Sunday. I was down for the whole day. No, it was Monday. Yeah, Monday I was down. Saturday I was out and about. But yeah, fun fact about Thailand: if you guys come out here and you're getting street food, make sure it's cooked make sure it's cooked like right in front of you, and then you don't buy it like at the end of the day, because yeah, I've gotten sick more from these like little food vendors than anything, right? And if you're to throw it in the microwave and then heat it up for like 30 seconds, you're good, you're gold there. But man, like I tell you, whenever like I have stomach pains, it's usually from the food that comes from these little street vendors. But I'm not saying that they're bad, all right? Don't get that twisted. Some of these little mom and pop little street vendors, man, they got the food that bangs. Like, it is so freaking good. And it's like seasoned well. It's better than a lot of the restaurants, to be honest. But yeah, you got to be careful, especially if you're out here eating food, right? Especially when you're drunk and you're just like looking for something quick to eat. That is where I slipped up once. And man, I paid for it for like 5 days. It was horrible. I had to take like an antibiotic in order to like get me right. But I'll spare you guys the details. But yeah, I will get that 7-Eleven footage. If I can't do one, what I'll do is I'll find one on YouTube that's really nice, that isn't, like 50 minutes long, talking about their day. I'll try to find one that's like quick and easy. But all right, guys, I'm going to end the stream. We're pretty much at the top of the hour. I got to get ready for the gym here. I appreciate you guys joining the stream as always, and putting your comments in and joining me on, kind of this conversation. And definitely, tomorrow is important. Keep your ears open. Definitely keep your eyes open. Just be aware of what's going on in the bigger picture. All right. We are fine. We are okay. This is just a blip on a very long road. All right. Other than that, I'm going to end the stream. You guys have a great rest of your evening or great rest of your day, wherever you are in the world. And I will catch you in the next stream. Take care, guys.